In Star Wars, the intergalactic empire is decentralized across the entire galaxy.
So that's the beginning part of a clip from one of the most interesting presentations that was given at the conference about real-world asset tokenization. And the topic of the presentation was UK crypto regulations, current status, and future outlook. And basically, one of the panelists called James Burnie and is a partner at a company called gunnercooke. And I just had a quick look at the company and their raison d'etre and what they do and stand for. And I now totally understand why this person spoke the way they did. Some of the language is a little bit colorful, but it's very, very passionate and from their heart. And they kind of went through the scenario of legislation, regulations in the UK, and give us a kind of a historical outlook of the before, the during, and after, and the effect of, the stance of the British government in terms of regulations and the effect on what's happening now with cryptocurrencies, stable coins. And he did mention at one point that the exodus of the wealthy and the outliers in the country because of the policy of the government is partly related to this, and how there are parts of the world now in 2025 where it's easy to get to. It's part of this whole sort of age of Aquarius, Homo Deus era that we're in, where the human becomes sovereign, financially free, financially independent of the nation state, and are able to, at least the wealthy, make these kind of decisions where they just exit the nation state for a more favorable, city gate. They enter another city where within the walls, the conditions are more favorable. And how, places like Dubai and Portugal and wherever, Thailand, are more suitable for some of these billionaires who are just fed up of the way things are. And in 2024, I believe, we had, something like 16,000 billionaires or millionaires or something like that exit the UK. And I don't think the data is out for 2025, obviously, because we're still in it. But it is kind of projected to be maybe even worse with the exit, which is why, of course, partly, I believe is the main reason why the government is proposing bringing in the exit tax to try and, keep people within the city walls, right? Anyway, so the rant is about 5 minutes long or so. He also did some other rants, but this bit here probably was the best one. So I hope the audio is okay. I tried to, get as close as possible to the speakers, but I can hear it. So I hope you can hear it too.
Currently, the human race is centralized on Earth. Crypto is centralized on a central group of those people. Your project is centralized on a subset of that. So decentralization is a little bit and regulators kind of sense it. So when you do anything in DeFi, they're going to look at the entry points, they're going to look at the communication points, they're going to lose all of those bits, because until you become the empire from Star Wars, you are not really totally decentralized yet. And even then, Darth Vader is a centralizing element in there, I'm afraid. So if you've got a CEO, how can you see everything that doesn't exist? We accept payment in crypto because we're trying to pretend we do DAOs. We annoy all the other people by now, so as soon as you accept payment in fiat, you're no longer centralized, effectively. So that is kind of the big thing. I think the thing to be aware of at the moment is we actually have spoken to Labour, Conservative, the whole lot, right? Most of them don't understand it, most of them don't even care about it. One or two of them say they care about it, and as soon as you ask them a question, you don't understand what you're talking about, if you see what I mean. So, when you hear about things like tokenizing funds and all the rest of it, yes, it's gimmicky. I'm not going to pretend for a moment it isn't. But this is baby steps for a lot of people who do not intrinsically give a monkeys about crypto, do not give a monkeys about the sector, and really couldn't be bothered at all. We were at the Labour Party conference trying to talk to them. One guy turned up for 10 minutes, went, we're now pro-crypto, get me out those votes are off now, effectively. That is the level of caring in the room. It is pretty much zero. So if you're going to do it, you've got to go slow. You've got the worst thing in crypto is its own PR. It spends more time infighting between NFT versus DeFi versus this versus tokenization, and not enough time coming together in a sensible, grown-up manner, rather than the "we hate regulators" placard, to try and actually engage people, talk them out. And that's why initiatives like tokenizing funds are important, because they're pointing out to people those are real use cases in the room which are more than just money laundering, which bluntly is the stick we keep being hit with.
But there's also, perhaps more fundamentally, regulation in the pipeline for the foundation layer of the new digital economy, and that is stablecoins. So the FCA and the Bank of England have been consulting aggressively on stablecoins over the course of the last year, and the idea is to bring stablecoins firmly into the regulatory fold in the United Kingdom. What do the proposals look like? Well, in outline, we're looking at one-to-one, or requirements for one-to-one backing in high-quality liquid assets for all stablecoins. An idea that all funds should be held in statutory trust for stablecoin holders, and independent third-party custody of backing assets. There are two aspects of the proposals which are perhaps the most controversial, which have attracted the most discussion. One is a complete ban on interest-bearing stablecoins in the UK, and another, which is for systemically important stablecoins, a limit on individual holdings to £20,000 per individual. I think there will be higher rates for businesses, but for individuals, £20,000. And why do the regulators want all of this? Well, the idea is to avoid stablecoin issuers chasing yield and therefore holding riskier assets which are less liquid, and frankly to prevent competition with bank deposits, which could raise, in the regulator's view, risks to financial stability. So far as the holding limits are concerned, well, the idea is to prevent sort of mass flight to stablecoins in the event of financial stability in the UK. What the Bank of England fears, in essence, is a sort of bank run on steroids in the new stablecoin era. Why are these limitations controversial? Well, firstly, they seem to be fundamentally uncompetitive. They give incumbent banks an advantage, an unfair advantage. Second, they allow issuers of stablecoins to keep all of the upside of holding the backing reserves, which can be very considerable. Think of Tether and the profits that they make. Third, it leaves stablecoin holders in the UK chasing riskier yield elsewhere in the cryptoverse, instead of sticking with perhaps more stable assets. And finally, advocates of stablecoins say that this sort of renders them stillborn. It kills off their usefulness for things like large payments and savings. So for now, the jury is out, in my view, on the sort of how stablecoins will be regulated. I suppose I'm short-term bearish. I think the bank lobbyists will probably get their way, and stablecoins are going to be kept on quite a short regulatory leash in the short term. In the longer term, I'm somewhat more bullish. I mean, my own view is that usage of stablecoins is going to become so widespread internationally, here and overseas, that more permissive regulation in the UK is, in the long term, inevitable. So on the one hand, we've got first-class consumer protection, but on the other, on one view at least, we are losing ground in a field where the UK could genuinely lead. James, any thoughts about it?
Yeah, so I'm going to put the world into pirates, cream puffs, and fruit bats. Okay? We started off with the pirates. The pirates were lovely. The pirates then in 2015, you can go where the fuck you liked. It's the glory years of piracy. The pirates chugged along. We then had a group called Morecambe & Wise advising the regulator. Morecambe & Wise is a comedian's test for those with certain vintage in the room, which believed in that's a good word. AML, that's a good word, let's stop that. So that's what the Europeans hit upon, because at the time they were updating the AML framework. They then brought in a crypto registration regime in the UK for AML. You give that to the FCA, you ask the FCA who's fit and proper, the FCA doesn't know what that means, so it goes back to the old rules and goes, that's what that means, which means we have a regulation which basically does have a set of rules, we just don't tell anyone what those rules are, how to interpret them, or how to comply with it. So you can actually win, but you have to know what the FCA is thinking before the FCA thinks it. And then you've got the sad reality, which is about 150k to get the registration, it's not a realistic number in the UK, and it was about 20 to 30,000 USD to set up in BVI. You can then get fancy and fancy with tax ideas, which now are completely fucked, because in the modern world where we are skinned, we've changed the tax rules, so next year they're going to go completely fucked. But you can spend less money, say, for sure. I can go on to that if you want to go into that at the time. What you now have is the oh shit response, which is we've just lost everyone abroad. So can we A, create a really sensible, proportionate framework as a cat to bring them in, or B, use a baseball bat? We went for the baseball bat. This was called the financial promotions regime. This is basically a way of baseball batting people over the head, such if you want to sell into the UK, you have to comply with UK rules. Your community then splits into true pirates and cream puffs, if we go back to that group. The cream puffs want access to UK retail, they want to be loved, they want to do it legitimately, and they kind of don't want to go to jail. The cream puffs pay a premium to access the UK market, the same way they pay a premium to access the EU market. You've then got a ranking among the regulators of how you cost and all the rest of it. The pirates go, sod this, how do I sell as much money for much stuff as possible without going to jail, but breaking every rule to the extent I can break the rule. Welcome to the world of VPNs, which is a sort of murky grey zone you communicate without communicate. No lawyer will sign off, but it's what a lot of people are currently doing. The shunting battleground at the moment is trying to figure out whether it is best to start off as a pirate, upgrade and come in that way, or to come in as a cream puff that way. The last thing just to mention is NFTs are outside of scope. I personally love NFTs in a way which nobody else seems to care about NFTs. The fund managers don't care about NFTs, the CEOs don't care about NFTs. I love NFTs because we're outside regulation again. The last thing I want to hit upon is all of our discussion today is in unregulated tokens. Our Europeans love regulation. They think if you regulate everything something heaven, suddenly the world is a better place. We basically flatten every single company in existence and you can't be shouted at. The Americans love blowing shit up. So we've got Americans going, we're not going to bother with giving any regulatory actual money to do shit. We're just going to see what happens and come in after the things have done. And the UK loves to have a midlife crisis. So we're somewhere between the two, not knowing quite whether American or European. The effect of this, and we've been involved in drafting legislation for Kazakhstan, Mauritius, about half the African countries. When you stick the words innovative and regulator in the same room, you're talking like innovative accountant in the same room, expect fear, panic, and God knows what. So when a regulator gets a hit with something new, what it does is effectively takes a pre-existing regime, copies it, pastes it, bugs about with it a bit to try and make it look a bit better, and hey pester, there we go. And given the speed of crypto, this is the best you could possibly expect from a regulator. So this is exactly what they're doing. So, what you then walk into is one of the reasons the regulators of things like market abuse is they understand what market abuse is, but sort of. So the regime is going to be sort of implemented. It doesn't properly start full forms of market abuse, it doesn't cover it, market abuse in crypto does not behave like market abuse in shares. You could inside the trade shares, but can you inside the trade Bitcoin? It's one of life's great tragedies, and I've tried to if I could, but I've not yet got it to work because I'm not wealthy enough, so that's the end of me in that picture, and I don't think anyone else is too, apart from Satoshi. You then get the interesting one at the moment, which is the most political thing in the room, is currently stablecoins. The fundamental reason why this is so political is most stablecoins are USD backed stablecoins. In order to get your stablecoin to track USD, you stick it in US denominated assets, US bank accounts, US bonds. This is a fantastic way of curing US debt problems. Also, the Genius Act is basically a 1963 piece of US legislation taken out the drawer, blown the dust off, implemented, and pretending it's new. It's not actually that new. It's not a very old piece of US legislation they brought out. This allows other people, other politicians in the US who are commercial guys to interfere with the US economic system. Does that sound like something Trump would want to do? I leave that to the conspiracy theorists. You then got the Europeans. The Europeans are worried that nobody really wants a European-backed stablecoin. Even more fundamentally, which European-backed do you go for? Germany-backed, Italian-backed, French-backed? Fuck knows. They then have this thing, therefore, where they're splitting out European and US. So effectively, they want you to get home stablecoins dedicated for home people. The Americans want everybody going to stablecoins to solve all their problems. The Europeans are trying to stop anyone going to their ones to solve their problems. And that's where you'll get to this major split between two, which why no stablecoin exists in the EU. And to give you an idea, if you give your stablecoin interest, you want a cheeky trick, give your stablecoin interest, declare it a security, not a stablecoin, and you can sell it. Because that is not hitting the political guys on the head and they don't have imagination. If you make your stablecoin non-interest bearing, every European hears a panic attack, good luck trying to get that one through them. And then the UK is back having its midlife crisis. So we actually work with one of the first, obviously I think the only currently UK regulated stablecoin, and they've got all sorts of things, so the UK doesn't know which box it wants to go to. So to give you an idea, this is techie geeky lawyers, so apologies in advance. Europeans announced it has to have an EMI license. That is basically an EMI. Think of it like a bank, which isn't a bank. It's an entity with delusions of being a bank, but isn't actually a bank. It gives you shitter protection, effectively. The UK has announced, hang on a moment, it has to be a bank. The UK at the same time has announced we're going to be the same as the Americans. And lots of MPs we know are going between the US and the UK congratulate themselves on being like Americans. I've also got someone who's done 40 pages on all the different bloody differences between the US and the UK, which shows we're nothing like the Americans in terms of how we sit together. So stablecoins are coming first, it's the most political thing in the room. Staking is another one which is going to be an epic issue, because they don't actually know what that means, and these crypto guys have not really helped themselves, because they call anything which generates yield staking the vague hope that, so I'm going to call it approach to naming things, which is either down to a lack of imagination or DeFi guys trying to pretend they're not DeFi. Again, I'll leave that to the space that goes to the other side of the aisle. And then you've got this huge speed to create. So what you're going to get, in my view, is in the next year or 2 years, you're going to get mass rollout of different types of regulation. You're going to get regulators saying they're going to be proportionate. Most regulators don't know what proportionate actually means. We're actually working on a couple of initiatives, like appointed representative, which we'll talk about later, but that's about trying to bring the cost down. So we have ideas to bring the cost down. And if you're going to go into bat the regulator, please do not go in buying just a poor resold. They don't give a shit. Go in with we're going to create the same level of consumer protection, but we're going to do it in a more efficient, better way than previously. And if you want to be a real bastard, you go in and you do that, and you say, TradFi hasn't been able to do this, we're better. So money laundering, TradFi only goes back 2 steps, we go back 6 or 7 steps, money laundering, we're better. Why can't TradFi do that? Shouldn't TradFi be on chain? When FTX exploded, it was actually fantastic news in front of regulators. Because for the first time we went in the regulators and said, all those fuck-ups in FTX, that was TradFi. The solution, that was blockchain. All the records were lost, nothing could be found, but on blockchain it could be tracked. The solution to one of the biggest catastrophes of all time was blockchain. That is why NASDAQ was looking at using blockchain. It's a way of basically evening up the score. TradFi loves slagging off crypto, time for crypto, to point out that not everything in TradFi is wonderful. Crypto did not invent fraud, even if it's trying to lay claim to the crown. TradFi got there first. Crypto did not invent insider dealing. TradFi got there first. So I think it's time to take a little bit more of a macro picture and look at it from both sides of the aisle.
So there it was. I have quite a few more of these golden moments from the conference, which I'm going to be sharing with you guys with context as the days go on. Obviously not specifically related to XRP, but it does relate to, RLUSD and regulations. As you heard there, he did mention something to do with the government preferring stable coins and not interest bearing, so that that protects the flight to stable coins and also protects obviously the British pound, or the national currency anyway. And this is one of the reasons why many jurisdictions around the world would basically opt for stable coins that are not non-interest bearing. Okay. So none of that was my personal opinion. That was the opinion of the gentleman that was speaking, and not financial advice, not legal advice. And I hope the colorful language wasn't too much for you guys. I'll see you in the next one. Peace.